Hey traders, and welcome to the Forex market research video. So in this video I won't show you any trading setups. I will only talk about my research. If you are a serious trader and if you are interested in the Forex market research, well, you are welcome. And if you are not a serious trader and you don't care about any researches, you only want to generate money trading, or if you're looking for some clues and if you're looking for some strategies or signals, well, then maybe you shouldn't waste the time watching this video. Okay, back to my Forex market research. So what I do recently is analyzing the swings of the market, and I calculate what is the average size of the swing on different time frames with different algorithms, and what is the average duration of a swing. It gives a bit of advantage. So when you know that the average correction should terminate at this size, then you can set your orders respectively. And if you know that an average impulse should terminate there, then you can set your take profits there as well. Okay, so let me show you what results I have. There, euro dollar, you see these numbers. I will share this Excel spreadsheet in description. I will give you a link, you will click on that, and Excel Online will open this Excel spreadsheet, so you will have an opportunity to examine these numbers. So I have euro dollar, pound dollar, and dollar yen that were analyzed already. So this is the average distance in pips. This is the average duration in bars for every swings, different algorithms. This is daily, this is 4 hour, this is 60, this is 30 minute, 15 minute, and 5 minute time frames. And I calculated the average impulse lag and the average correction lag. So you also has, and of course the average correction is slightly less than the average swing, and the average impulse is slightly more than the average swing. So you should keep in mind that some differences. Okay, based on what I have, I did perform a wonderful backtesting on euro dollar, and I'm going to do some other backtesting on dollar yen and pound dollar. Okay, so on that one. Okay, on dollar yen and pound dollar, these are interesting pairs. So what I decide, for example, look at this number. This is the smallest pip. This is the smallest swing identification algorithm on 60, yes? And it says that the average correction using this algorithm is 45.5 pips. So I'm thinking to this, if the average correction is 45.5 pips, then everything that is less than this number is just don't worth paying attention to. It is simply noise. So let me filter that, and let me use the I don't know, let me use some algorithm to draw it. How you can perform that? You simply measure the swing, and if it is more than 45.5, then you draw this line. If it is more, it is obviously more, then you draw this line like this. Okay, then you calculate from here. It is less, right now it is more. That's why you skip all this noise that takes part in the middle, and you move further like this. So you draw it again and again. So initially it draws here, then you measure it. It is 46, so you should not skip it like this. Well, I understand that it is very, very monotonous to draw this swings this way, and of course the best way for analyzing swings, the best way for analyzing the markets to perform the backtesting, be it a pattern recognition, be it some other stuff that you may use in your trading for with swings. I mean with swings, maybe Elliott wave calculation or whatever. So the best way is to use the MPS5 pattern recognition software, and there are a number of advantages, number of things that MPS5 possesses that no other software possesses. and I will quickly enumerate them, and then we'll continue with my market research. Okay, so I'll apply the default template and what it has. First of all, it is the graphic control user interface. Okay, you just switch. You see that? You switch between some different patterns. You set patterns, you delete patterns, whatever. Okay, you zoom it in. You can even delete the indicator from that. Okay, the second is multiple algorithms. I don't know any other software that provides you this multiple algorithm switch. Well, if you purchase some software, both for real-time trading or for backtesting, you can only rely on the algorithm that a coder, that a programmer has coded, yes? But with MPS 5, first of all, you can set all these algorithms here in settings, and there are 10 of them. Automatic. Group 1, you have oscillator-based algorithm. Group 2, you have price-based algorithms. You see that? You have 10 automatic swing identification algorithms. The next advantage is manual swing identification. Majority of software, the pattern recognition software that in the industry, they only provide you with one automatic algorithm and no manual. But manual one is very important. Sometimes the market moves the way it cannot be calculated, yes? So if you simply switch that to manual, and let's zoom it in, you can draw patterns. You can even draw them on empty space, or you can use different mode to draw them this way. Okay, let's go back to this type of analysis. Another advantage is that you have two groups of patterns. They are harmonic patterns and advanced formations. Majority of you don't even know the difference between the two, and well, it happens that you don't understand the difference. If you proceed with your pattern learning, you will find it. Okay, in this industry, you either have harmonic patterns or you have advanced patterns. There are some other bullshit software that is telling you that it shows harmonic patterns that they are neither harmonic nor advanced. For example, saying that cipher harmonic pattern, you never have this pattern. Cipher is not a harmonic pattern. So if you see the software that tells you this kind of stuff, then most likely it is a scam. Cipher is not a harmonic pattern, and the guys who tell it also don't understand it. Okay, well, the next that you have in this advanced pattern trading group, you have Pesavento patterns. They are not advanced formations from trading power T1 trading groups. They are a bit different. I just included them to have that good column of patterns. Okay, so you can switch them on and off. And what is amazing about this pattern recognition software, about 5.2, that you can set your own pattern. You see that? If you dislike all those godless bats and whatever you have, you are welcome to go to the settings, you enable this to true, and you set it. You set the minimum B point, maximal B point, minimum C, maximal C, completion point, invalidation point, and that's it. This is how I use my unified godly formation. So I just click to custom and I use my own settings. I dislike godly advanced formation, I dislike bat advanced formation, I also dislike godly harmonic pattern, I also dislike bat harmonic pattern. You see, I like my own, which is a unified godly. Okay, then another advantage is that the software gives you backtest functions. So what you need to do to get access to the backtest, simply scroll it. and you will see patterns appear on history if there are any. You see that? They appear on history. You only need to calculate the performance of these patterns. Okay. Another thing is that you can use filters. And if we go to the settings of that, we can set some filters like this. We have direction filters, we have minimum, maximal size of filters, we have multiplier, it is the previous movement filter. For example, if you have a pattern, if the previous movement was very small like this, then the pattern is not drawn according to that. But if the previous movement is noticeable, then you know that this is a good structure point, then the pattern is drawn. Right now you see I set that to 0 because I don't care about the filter, and I will tell you in a minute why, and it is very much connected with my market research why it is a 0 and why the B2C movement is also 0. BCK is actually the validity of your last CD movement. Okay, and also you have some additional filters. For example, you need quick deleting something from your chart. Yes, just press X, S, and they all delete it. You need to calculate 3 ATR above some level, just press Z, and you have these ATR levels. And there are a number of other functions like time that is left till a candle, the 3 ATR, 2 ATR, and 1 ATR, the spread, and so on. There is a number of other additional functions. And one of the functions that I didn't add here, but this function is also amazing, is the ability to stop. So you see, when I switch to daily, the patterns are drawn according to daily time frame. But what if I found a pattern on daily and I wish to analyze the price section on 1 hour? You see that? I simply stop it, turn it off, go to 1 hour and find this pattern. Where was it? So it may take some time. Here it is, the daily pattern. You see that? So I can analyze the execution. Maybe if I need some kind of confirmation on 1 hour time frame. You see this long wicks, tweezer top. Once you have it, you can execute it to the downside instead of using limit orders. Okay, you see? So these 9 advantages are not seen in any other pattern recognition software. 9 advantages. So other software simply is less powerful. Okay, and of course I'm giving a cheaper price. It is an advantage number 10. I'm not hiring any coders. I'm a coder myself. I'm not paying to other people to develop the software. I do it myself. That's why it is cheaper. Okay, hope you got my point, and let's go back to our Forex market research. First of all, as I told you, I had an idea to filter all the swings that are less than 45.5 on Euro-Dollar 60 minutes. So I go to Euro-Dollar 60 minute and I go to the algorithms of my indicator, yes, and I switch it to pips because I'm going to use the pip algorithm. And then I go to my pip distance. What should be the pip distance? And I set it to 45.5, yes, exactly the one that is. And what the algorithm does, it simply ignores all the movements that are less than 45.5. If you might have noticed, it does not depend on the time frame, because the 45 pip movement on 1 hour is the same 45 pip movement on 30 minutes, and is the same the 45 pip movement on 15 minutes. The difference only the number of bars it takes. So this algorithm does not depend on your time frame, and I find it interesting. So you see the same pattern we have here. It is the same 1 hour, 30 minute and 15 minute. It is the same pattern from here. Okay, so I find it very interesting because switching time frame is subjective. You may have 2-hour time frame, you may have 45-minute time frame, 30 minute, you may have even 28-minute time frame or whatever. You can switch it. It is subjective. But what is not subjective is the price movement. It is a bit objective. So when you use price movement as the key factor and you eliminate the time factor like this, yes, then you can find something interesting. So what I did, I performed the backtest finding patterns on 20-year period. So let me show it to you. On euro dollar 1 hour using the 45.5 pip reversal factor. And what I found on this 20-year period is 658 trades patterns. Out of them were 369 winners, 289 losses, and it is exactly the 56.08 win probability and 43.92 loss probability. 56, 43.92, with an average win of 33.9, almost 34, and average loss of 37.4. So as you see, the average win slightly exceeds the average loss, and the average risk to reward is 0.91. 0.91 is less. It is inverted risk to reward. Your losses typically greater than your winners, and this is based not on 100 trades, it is based on 658 trades. Okay, the expectancy is 2.61 pips. On each and every trade you expect to generate 2.61 pips. Okay, and the expectancy in terms of R equals 0.06.98. It is almost 7% of what you are risking. If you are risking $100, then you expect to win 7% of what you risk. 7% of $100 is $7, so you expect to win $7. If you risk $100, $1,000 for your trading, then you expect to win $70 back. Okay, here's the number, additional numbers. There's the maximal drawdown number. When you know your maximal drawdown, you can calculate your position size, and if you don't want your maximal drawdown to exceed 20%, of course you should keep in mind that 20% should not be should be equal to this maximal drawdown, and or less than 20%. The maximal drawdown should be less than that 20%, and this way you should calculate the appropriate position size. Of course, if your position size is great, you can lose half of your capital, half of your account in 2 trades, yes, but if you don't want to lose that, you should calculate the position size according to this. So maximal drawdown is a very important number. There is some win and some loss. They are additional numbers. They are not that very important, but what is important is the relation between these numbers. So let me sip my coffee. The relation between these numbers. So what it says that total amount of winners outweighed my total amount of losses by 1.16 times. So this is very important. You should think it. Every dollar spent gives 1.16 back. Every dollar spent, and you should think it as an investor. So what is every dollar spent? It is a stop loss. Every dollar lost in your losses. So it is called every dollar spent. You spend your dollar, every dollar invested gives you a 1.16 back. You see? This is the profit factor, what it tells you. Of course, if you spend $1 and you only have back 80 cents, of course you will have negative results and your strategy will lose money in the long run. Losses in a row, some additional numbers, 9 losses in a row, maximal. Winners in a row, 11 winners in a row. And profit factor, recovery factor, it is another statistical number that is calculating the ratio between the highest high on your equity curve and your maximal drawdown on your equity curve. And the number says 3.23. It basically says how fast your strategy recovers from a drawdown. And it says that the recovery takes 3 times faster than the drawdown itself. And you can see that the drawdown takes enormous number of trades and recovery is very fast. Then it is enormous number of trades and recovery is very fast. Okay, so you can have this expectancy. And now I will share this Excel spreadsheet also in description. I will give you the link to this Excel spreadsheet. And if you are an MPS customer, you can simply set it to these settings using this Excel spreadsheet, and you will have absolutely the same patterns drawn real time in your trading, for your trading, exactly the same that were drawn in this backtesting. And basically with some minor acceptances, maybe you can hope to have similar results. Okay, now let's talk about the psychology and about the factors that that separate winners from the other crowd. Okay, I will use the terminology of Mark Douglas. Mark Douglas using the terminology in his book Trading in the Zone. Okay, so he says there are 3 groups of traders. So I'll just move it here. The first group is 5 to 10%, depending on different markets. They are top performers. The lower group, from 20 to 30%, is the complete losers. They are beginners, whatever. And in the middle, he calls them boom and busters or whatever, something of this kind. So it is, let me calculate, 25 here, 40 here, so it is 60 to 75% in the middle. They are boom and busters. They are somebody who generated and lost everything, generated, lost everything, generated, lost everything, not break even, mostly losing, and not enough to have consistent incomes. Okay, so let's consider this. So who are these guys? These guys that just came into the market, they have no idea about probability thinking, and that they think that the success is simply the number of winners you have. And if you have 3 losses in a row, for example, this means that your strategy is not working, or maybe 5 losses in a row, and they simply quit. So they quit somewhere here, 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 here. They quit somewhere here, maybe here sometimes, and they never have winning. Okay, so when they have the smallest drawdown, they switch to another strategy without giving a chance for a strategy to recover itself. Okay, this one is the last category, so let's talk about this. So what is this category? These guys already understand that trading is not that kind of simple. Well, it is simple, but it's not easy. It is not that is advertised that you just trade without spending your efforts, without spending your time. They understand that it requires some work, it requires some efforts on your part. They understand it. And some of them, maybe majority of them, even performed some kind of backtesting. And look at this. So they performed the kind of backtesting, and what they did is calculated 100 trade sample size. So you see 109, 110, 100 trade sample size, and they have this kind of result. They know that their drawdown is this, they know that their drawdown is this, and they understand it. Okay, so this is wonderful. So my strategy is good, so let me use my real money to start trading. And for example, they start from here, yes? And what happens? Boom, you already hit your largest drawdown. And after that, this group starts having doubts in their strategy. And when you have your drawdown doubled, they say, oh, this is something that just don't work, so let me quit it. And they quit at this point. And they never see this recovery, they never see that. So only top performance see this, because top performance have a long-term perspective. They have a confidence, 100% confidence that in a long run may be very, very long, the strategy will work. If you will remember some traders, maybe some famous traders, legends like Richard Dennis or William Eckert or Linda Rushke or whatever you can remember of, they all had losing years. So for example, if you have a career of 40 years trading, 2 or 3 years you were losing, you ended up negative. Can you imagine that? You were trading for the whole year and it is negative. Of course, next year you were wonderful, and maybe some other year you were negative as well, and then you were positive. For the whole year you were negative. And these are top performance traders. They know it, that they may have a year negative. Okay, that's why you should look at extremely large sample size. You should look at extremely large long run. At extremely long run. If we talk about long runs, your long run should be very long. Okay, so hope you understood this. Just imagine this. You start trading from here, and for a period of 100, from 110 to 265, yes, 150 trades, you have this result. What you will do? You will quit. You will say, you know what, Alex, your patterns are bullshit and your software is bullshit as well. You will simply quit because you don't know that it will recover. You have doubts, you don't have confidence, and you miss this. You see that? So this is the problem, a big problem, that you don't think in probabilities, you don't think in large numbers, you all think in small numbers, very small numbers. This category is thinking in, let's say, 310 trades. So if you don't have their desired 310 trades winner, they quit. This category is maybe thinking 50 to 100 trades, maybe. But this category is somebody who is thinking of thousands of trades. You see that? So this is the difference between them. The number of trades you are thinking. Okay, well, that's it. Hope this psychological explanation was useful to you. And if you find this video useful, just type a comment, hit that like button. Maybe you perform some kind of similar backtesting and you have some results you can share in comments as well. Okay, and if you want to be notified about future updates about my future researches, simply click that notification thing that looks like bell and subscribe to my channel, to my YouTube channel. And until then, good luck and good trading. I hope to see you soon.